Hello, Gianluca Taroli. In the United States, Donald Trump lifted economic growth expectations, which pushed the dollar upward. Since then, we've observed a fallback in the U.S. currency in line with the lack of reforms by the new administration. And after an appreciation of 40% since the bottom in 2011 of the dollar, are we seeing the end of this upward trend?
Probably, at least we think so. We think actually that the US dollar is currently in a process of topping. There are several fundamental factors that explained and supported the uptrend of the US dollar of 40%, as you mentioned, that are now fading, if not reverting.
So what are these elements?
When we look at currencies, we always have to look at them in relative terms. And in terms of economic outlook, the relative performance of the US economy compared to the rest of the world is actually narrowing. We have the US economy that is stagnating to the current level of activity, while to the opposite, in the Eurozone or even in emerging markets, we have growth that is accelerating. So this is negative, I would say, for the US dollar. The second element is linked to the dependency of the US economy towards the rest of the world. The US economy is displaying actually a current account deficit that is quite large, while at the opposite, in Eurozone, we have a large current account surplus. And finally, I would say that valuation has become expensive for the US dollar, and interest rates differential are already at a peak.
So is this change in the outlook of the dollar changing also your investment policy?
Yes, we need to take into account this change of view on the US dollar because the impact of the US dollar is quite important on various asset classes, especially regarding emerging assets. When we have a depreciating US dollar, is usually favorable for emerging assets.
So what is the economic outlook for the emerging markets?
In terms of activity, we think that 2017 should mark the end of the narrowing gap between the growth of emerging and developed economy, and we should start to see a widening gap again in favor of emerging economies.
Has this upturn already been phased in by the market, or is it still a good time to buy emerging assets?
To see if it is already priced in, we need to have a look at valuation of emerging assets. Regarding equities, we think that emerging equities have now a discount of roughly 15–20% versus developed equities. Concerning fixed income bonds, we think that the extra yield offered by emerging bonds is large enough to compensate for the additional risk that we need to take to be exposed to these bonds. And finally, regarding currencies, we think that valuation of emerging currencies is still quite cheap. So globally speaking, yes, we think that it's still time to buy emerging assets.
Thank you, Gianluca Taroli.
Thank you.